Turnkey provider, in my definition, is an organization who basically has three main components to their business. They find properties in a market that is a well-performing market to begin with, and buy these and renovate them with their own contractor/renovation team. Then the middle component or second component of that company is the marketing.
You found the Real Estate Law Podcast. Because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. If you're a real estate professional or looking to build real estate expertise, then welcome to the conversation and discover more at realestatelawpodcast.com.
Welcome to another episode of the Real Estate Law Podcast. This is Jason Muth here, along with attorney, broker, Rory Gill from Next Hometown Town Real Estate, Urban Village Legal in Boston. Hey, Rory.
Hey, Jason. It's good to be here.
Yeah, we have an excellent guest today. We're going to be speaking to an actual PhD who is also a veteran who has flown for a couple decades in multiple air forces. Did I get that right, Axel?
Yeah, totally. Very good.
Yeah. We are speaking with Axel Meierhoefer. How close was I?
Very close, yeah.
Very close. Okay, I did take German until 10th grade, and I did not want to say that to you beforehand because now you're going to hold that against me and try to say some words to me that
we're even now. I was
know.
2 minutes late, so we're even now.
We're trying something different. I'm outside today in the beautiful sun porch, so hopefully we won't have too much background noise, but the weather was just too nice not to. So I know, actually, you're in sunnier territory than we are. Massachusetts gets, not as much sun as places out west. So where are you today? And tell us a little bit about your background.
Yeah, I'm at our home office in the San Diego area. We got 295 days, and we have one of those today. So yeah, it's pretty good.
295. I think that's a couple hundred more than we normally get, right, Rory?
Yeah. That's why it's happening right now. We have a beautiful day. We have to be outside. We can't let it go to waste.
Yeah, absolutely.
So Axel is the founder of Ideal Wealth Grower, and we have a lot of great things to talk about today with Axel, including getting over analysis paralysis and taking the first step toward passive income and reaching your time freedom point, how to earn your first turnkey property, and why residential real estate investing is a good plan for your money. I think those are things that a lot of our listeners are searching for this information from us, from other podcasts. There's a lot of it out there on the internet. I think that, we feel more confident ourselves with our investment strategy, the more of these stories that we hearing from an expert like yourself, Axel, I think is going to be really beneficial to both us and other people who are real estate investors and looking to capture their time back, because time is much more precious than money, in my opinion. So Axel, we'd love to hear about your background and kind of how you found your way into the work that you're doing, helping people find their time back and their freedom through real estate.
Yeah, so you mentioned the work in the Air Force. When I got out of school, I originally wanted to fly for the airlines, but they didn't hire at the time. And several people said, well, if you're that desperate to fly, why don't you join the military? And so I joined the Air Force and got pilot training and all that kind of stuff. And ultimately got really interested in the advancement of technology because, and I don't know how many people know this, when you work in the Air Force, regardless whether it's the US Air Force or the German Air Force in this case, is you're not just having the job to train to fly the plane, but you typically also have an additional specialization. And so my additional specialization was in electronic warfare. And that included, in a nutshell, how and what systems can be used to make somebody in a plane aware that there's a threat from the ground or from other planes trying to kind of shoot you down. Mm-hmm. And I was fascinated by that, and I wanted to learn more about it, and actually asked, how can I get more in depth, especially since the plane I was first introduced to learning to fly was literally just fresh out of the factory. And they said, well, if you want to do more of that kind of stuff, you need to get into flight test. Mm-hmm. And so I kind of still in uniform work basically for the company that built the plane. And most of those electronic warfare components came from the United States. So which meant if you wanted to learn how to actually, what's in them, how do they work, what did the engineers think, and then integrate them in the plane, you had to go there. So I, together with my wife and my daughter, we came to the US quite a few times every time about like 3 to 5 weeks at a time to get training and introduction from these companies. And at some point, my wife said, it would be nice if we could stay a little longer at a time and not just these relatively short sprints. And I looked into it and was quite surprised to see that the United States Air Force and the German Air Force had an exchange program for decades and decades. I applied. Long story about that I spare you, and got actually accepted, and then came over to become the assistant director of operations for US Air Force fighter wing, and flew F-111s. And one thing in this whole, why I'm telling the story about the military, is mainly because anybody who meets somebody at the officer or staff officer level that I was at, you're basically moving around every 2 or 3 years, which also means, especially when you get to a certain rank level, you are not the prime person to get base housing. So you typically have to look around in the community. Okay, what are the housing options? Sometimes bases have, some properties outside of the base where you can stay. Sometimes they say you should find something to rent, and sometimes it just makes more sense to find something to buy. So without really consciously thinking about it, a little bit of an introduction on how is real estate related to where you are and what you can do came from that. And then in 2001, I retired from the Air Force because you get to a point where your body is just not able to handle it anymore. And became an executive in a software company in Santa Barbara. And in 2005, basically started my own business. What I found is, what can I do when I'm a business owner to build something so that I have, for lack of a better term, some retirement plan? Now, keep in mind, 2005 was only 2 or 3 years removed from the dot-com bubble burst in the stock market. So for me, that was like, don't want to really touch that. And I remembered the experience I just explained about the real estate, kind of like dabbling, so to speak, in the military, and started thinking, okay, I need to find out how this works, because I really didn't feel I knew enough about it. And so I don't want to say I bought cassette tapes, but almost, and started learning about it. And then found a creative way. People called me completely crazy. We were renting in Santa Barbara, which people understand because it was even at the time already super expensive. And I thought, well, there must be a way that we can get into buying a house. And I basically, the only way I could figure out at the time was using an adjustable rate mortgage, 7-1, which everybody said you're crazy, was the best deal I've ever done financially. And so, and then kept talking about it. And as I got involved in more deals, more investments, and so forth, people started saying, one of these people who really dig into a particular topic, knowingly limiting, kind of like almost on rails, the niche that you want to be in. And so that niche, like you said, Jason, is basically residential real estate investing, anything up to fourplex, basically, unless it's a syndication that can happen. I really dug into that and told people stories about it, did 1031 exchanges and all that kind of stuff. And ultimately, people said, I'm sure there are plenty of other people out there who would like to have access to this information and not having to go through those 12 to 15 years that you went through. And I thought, okay, well, let's see it. I started a website, and it kind of started growing from there.
Thank you for your service first and foremost, but also for that, that entire transitionary period you had from being in the service to becoming an expert in real estate investing. Were you largely self-driven, or were there external forces or other people kind of pushing you along the way?
Well, the thing that I thought was interesting, and there are a few little, you could call them kinship type of things. And I'm still to this day amazed how we sometimes get influenced by stuff. So one of the things that happened, like I mentioned, the Santa Barbara area was, okay, real estate, and how do we do this creative financing and stuff like that? But I wonder who has or is doing something like that already. And I'm like, what names do I know? And for some reason, my brain said something about, well, there are probably other quote unquote immigrants who went through a similar, maybe not military, but similar. And the name, because at the time it was big in the news, was the Terminator. Mr. Schwarzenegger himself, right? And it made that kinship connection, okay, Austrian, German, close enough, right? Like, and I looked into it and I found out why the guy made tons and tons of money in movies and put most of it in real estate. he was at the time one of the largest residential real estate investors in the state of California. And I'm like, okay, let me look into this a little more. Right? So, yeah, and then, if I catch the bug for something, then I'm trying to learn as much as I can and, did courses and programs and learn more about it. And that's kind of like what triggered it.
Okay.
This has to be the first time that we've had a guest on who's been influenced that much by Arnold Schwarzenegger. So I think that says a lot about the work. I mean, Schwarzenegger's great, obviously, with, being such a great movie star. And he's spoken up a lot for human rights along the way.
Yeah, and sustainability big time. I mean, I really appreciate him sticking to his beliefs and principles regardless of political affiliation. So because I'm sure he's not very popular in the Republican Party as a strong advocate for sustainability, but he's never wavered on that, and I still to this day admire that conviction.
Yeah.
I was asking in large part, your influences as you get started, because, a lot of the work you do now is taking those people who have an interest in real estate and who are really afraid to take that first plunge and get into the space. So hearing about, how you made that pivot is just important for me to understand, what it is you in turn do for your clients and everybody that you're working with. Before we hop into specific questions with it, when you're working with somebody who's interested in the space and you want to try to encourage them to get involved, how do you approach that person, and how do you start working with them to give them are you trying to give them the confidence to go ahead, or are you trying to give them the knowledge to go ahead, or the techniques? What's the primary driver to get into going from somebody on the sidelines to somebody who's a real estate investor?
Well, what I'm finding, for one, finding people or getting in touch with people depends a little bit on how outreach. So I'm hoping that a lot of people who listen to us today will potentially be intrigued to say, hey, maybe I want to tap into this and learn more. So any kind of outreach and talking about the topic. The other area, a great place that I found from pretty early on is Bigger Pockets. And because of the fact that the forums on Bigger Pockets give people the opportunity to ask questions. And like I mentioned, this is kind of how the story about my getting here is connected, is as somebody who has always been educating others in how to learn to fly, how to become an electronic warfare expert, how to do real estate. For me, I'm more see myself more, and always did, in the role of when somebody posts a question in the forums to give my view and my advice to the extent possible, and how I would go about and answer that question in those forums. And I have to say, a lot of people ultimately, when I ended my answer or my suggestion with, if you want to talk more about it, just shoot me an email or get in touch. A lot of people did that, which I attest to, okay, maybe it resonated in some way. The point, on the other hand, is how to get people involved is, there is, in my experience now over the last few years, this media-driven misconception that you need to live, luckily, in an area that supports reasonable numbers in the context of real estate, where you can say, okay, I can still find a property somewhere between 100 and 200,000. I can still get into a new build project below 300 or 400,000, especially when you look at the median price development that we have all seen in the last few years. And when you look at the country as a whole, I'm including parts of Canada. So if you go like West Coast, including Vancouver, or East Coast, including Toronto, there are lots of areas where any of those numbers sound comical. I mean, Boston obviously is one of them too. Right. So when I then respond or talk about, well, if you live somewhere where you either have to live because that's your passion or your job or your family or whatever keeps you there, or like in my case, I live here because I want to live here and have these 295 days of sunshine. But it also means here we're not at 406,000 like the median for the country, but at about 760 or so for median. So when you look at this from an investment lens and you say, okay, if I typically do a down payment, 20%, my money, 80% from the bank, and you have 760 as the number, you have to run around with 160,000 plus cash. Well, how many people do you know that do that? Right. So that part to say, okay, I want to do it. I think it's a good thing. And I mean, we have the best accelerator. I don't know how you guys think about it, but when bonds crash, stocks crash, cryptos crash, everything crashes, I would say we are the last man standing, right? Like could be an Arnold pose. So because we're the only area that's still growing, people still make good cash flow, still have good investments, don't have to worry about value depression or anything like that. But the point is more, my message is, regardless where you live, and especially if you live somewhere in those higher priced areas, does not mean you cannot invest in real estate for good performance. And this whole journey to the time freedom point is investing in well-performing properties to shorten the time or the journey to your time freedom point. And that obviously doesn't work in Boston or in San Diego or Santa Barbara, unless you have an unbelievable job that gives you 50 grand a year in free money or something like that.
The way I've seen it in those expensive markets, and by the way, I don't blame you for not wanting to leave San Diego. I mean, like I've been out, it's such a beautiful, beautiful area, but it's expensive. You know, it's expensive here in the Northeast as well. As expensive as it is though, you know, I have a little bit of a different mindset toward it. I mean, the numbers are bigger, but it means that the leverage works better. And I feel as though if you make the right decisions and you put a bigger percentage into a deal, that's a big property value, $1 million or something like that. You know, when $1 million goes up by 25%, that's $250,000 right there. You know, when $300,000 goes up by 25%, you know, that's $70,000 right there. Did I do that math right? 75,000. It's just the numbers are bigger, like in the early. So if you make the right decisions and make the right bets, you know, I think that the numbers could accelerate a lot more quickly in some of the more expensive markets. But to your point, it is tough to get in. It just is.
Yeah,
I mean, that's why
I agree. But the thing about it is, one thing, percentages in this context leads to nominal results, right? And what I'm finding is, you're totally right. If you say, okay, if I can get $1 million property and had to put 200,000 down, the nominal result, as you just described, is higher. The point that I'm finding in most of our clients' life reality is they don't have $200,000. And it looks like an insurmountable mountain to climb to ever get to the amount of money needed to do the first step. So what I'm trying to get closer to them is to say, okay, well, if I can't do the 200,000, but over time, I can do 10 times 20 or 10 times 30,000, right? Which would mean, okay, I can get $150,000 property pretty much right now because I have 30,000, or I can get to 30,000 rather quickly. And then I can make a plan how I get to 30,000, another 30,000 in the next 15 to 18 months and get my second property and then and obviously if you do this for a while, then you also gain equity in the properties you did. You can do HELOCs and all kinds of other creative ways. But the point is, and I put this in kind of my application, if you want to call it that, this analysis paralysis component is to some extent informed by, well, if I look around what the properties are in my area, and let's just say, Jason, they are $1 million, then if I look at what I need to do to satisfy the bank, I need to come around with about 200,000. I don't have that, so I'm out. And what I'm saying, no, you're not out. You can live in Boston because that's where your job is, and you can invest, for example, in Ohio, or you can invest in Alabama, or you can invest in other places across the country. But the trick then becomes is, how do you build the trust? Because when you can't be there because it's too far away, I mean, most of my investments are somewhere in the middle of the country. I'm typically at least 1,000 miles away, oftentimes more. Well, then it becomes a matter of how can I institute some approach that allows me to trust the people who work on my behalf and still have good performance. Again, you know, some people get inundated with all kinds of rumors, and I feel, you know, rumors and myth is one thing, and I want to be a role model to say, well, let's look at the reality. Right? Let's look at the properties that I have bought myself, who I bought them from, how did I buy them? And I'm the living example because I, by the way, was one of those people who didn't have a $200,000 savings account either. I'm not saying, Jason, that the numbers aren't right. You're totally right. But the number of people who can start at that point is just smaller in my experience.
If I understand the strategy correctly, it's the idea that, even if you live in a place that's incredibly expensive, there is some place, I don't know how true it is these days. I've always heard the line that, regardless of where you live, if you go for a 2-hour drive, you'll find some place that where you can afford to enter the market. But even if that's no longer true and we're looking at, interstate investments, for this strategy, the key core component then is building a team of people around you that can help serve the homes. Is that right?
Or connect with somebody who already has a team. So this point, okay. I want to just respond very quick to this. If you drive 2 hours, you find something that you can invest in from a pure price perspective, which I think is probably true, still even true today. The issue is, and I said this earlier, and I really hammer this all the time also with our clients, is finding a place that you can afford does not guarantee performance. So it's not good enough to say, okay, I live in a place where every house is $1 million, but if I drive 2.5 hours, I can find houses for 200, 220,000, something like that. Well, if that 220,000 house is almost impossible to rent for a good lease rate, it's not performing. Okay. So if we really want to get to the time freedom point and say, okay, you put out a number, 5,000, 6,000, whatever per month in passive income, that is the performance that needs to be part of it. It's not just the price for the property, but how well does it perform? So you're right, Rory, you can either create a team or you can tap into a team. And so for the most part, what we are doing and what I'm showing and teaching and helping our clients with is to invest with turnkey providers, because they did exactly what you just said. They already built a team.
Mm-hmm. So when you say turnkey provider, are you saying large corporations?
No, a turnkey provider, in my definition, is an organization who basically has 3 main components to their business. They find properties in a market that is a well-performing market to begin with, and buy these and renovate them with their own contractor/renovation team. Then the middle component or second component of that company is the marketing and sales team that advertises those properties, whether they're for cash or for financing and so forth, and basically make it available, typically outside of MLS. So you have to have a relationship to be aware of that. And then the third component, and this is important in my view, and this is what we are very, very focused on compared to other definitions of turnkey. The third component is the fully developed property management component. So if you think about it, the same company finds a property, renovates it, hands it over to marketing and sales, who sells it to you, me, Rory, and then also does the management of that property on our behalf. Now, obviously, why am I so adamant about it is if you know that the property 123 Main Street in Cincinnati, Ohio, that you are currently renovating, let's say, Rory, we're the renovation team director, and Jason, you are the director of property management. Imagine what you would do to him if he does a shitty job on the renovation. Right? So knowing that you would not like that and allow that, it's an automatic, it's more like a human nature kind of thing to know if my own organization is hurt by any kind of oversight or not really well done renovation on the performance end. And especially I'm in the middle. I mean, I don't know if you guys have it on your Zoom as well, but I'm sitting in the middle. If you were those 2 components, I would say, guys, when you want me to buy this property, I want at least a 1-year guarantee that Rory did a good job. So Jason has to do nothing else than collect rent. Mm-hmm. Right. And so obviously that dynamic is way, way underestimated. And that's basically what I'm trying. Well, I've done this first myself when, like we said, when I started my business, I first dug into, found all of this, did this myself for years. And then when people convinced me to do Ideal Wealth Grower, now I'm offering these existing relationships and how this works to others. But it's really important to find partner organizations that have these 3 components.
I noticed that, what you're talking about, everything comes down to kind of the concept of the time freedom point. Can you tell us what that means before we go too far into the conversation and kind of keep dropping the term? What is the time freedom point?
Well, basically, the time freedom point starts out with saying, what is your current level of living expenses? And I always encourage people to say, don't just look at the net exactly what you pay for, but also include a little bit for if you like travel or if you have a hobby or some passion or so forth, add that in. Let's just say that were $4,200 a month, right? So that's then the number or the goal from today's perspective of passive income that we would need to accomplish through real estate investing so that you gain the freedom to decide what you want to do with your time. If you love your job, you might say, I keep doing it. Mm-hmm. If you feel that it's too stressful, you might say, maybe I can dial it back to half-time. Or if you say, well, it's kind of worn itself out, I would love to do fill in blank of any passion, hobby, whatever you want to do. Okay, then you can do this because you have the freedom to know that the passive income is covering your life expenses. So now then it becomes a matter of how do I get there? How far in the future on the calendar is it? And this is a very individual thing. So let me just give an example. If you say, okay, I find this property in Cincinnati that we just mentioned earlier, and that gives me $300 a month cash flow, free cash flow after everything else is paid. My turnkey provider, property management, my reserves, my mortgage, insurance, property tax, $300 left at the end of the month. Now you say, okay, 4,200 is what I wanted. Well, if I want to do 4,200, I think I need something like 14 properties. Then say, okay, if we don't have Jason's friend with the 200,000 in the back pocket, how many years does it take to get 14 properties? This is just the beginning viewpoint, right? Assuming each property would give us $300 a month. If we were just to plainly look at this, 14 properties, let's say we can get one per year, it would be 14 years. So that's then the plan. Now we look at how can we make it faster. Now, number one, nobody would basically keep the rent from property 1 through property 14 forever at the same amount. And you guys know this, your audience knows this, the cost typically doesn't increase significantly. Property taxes might go up a little, insurance might go up a little, your mortgage is pretty much fixed. So as you increase the rent a little bit, that is almost 100% increasing your cash flow. So 2-3 years in, the $300 has probably become $400. Now, not just for that one property, but for the other ones too. So what we are finding is when you say the starting position is 14 properties at $300 a month, you probably end up somewhere around about 10-ish, 10, 11, maybe 9. Not all of them will be 300, some may be 350, some may be 280 or so forth, but then they also keep increasing over time. But then also we have inflation, like right now we're feeling this. So the 4,200 that would cover it now, in 10 years from now, need to probably be 6,000. And that's basically the journey. And anything somebody can do, like I'm, for example, teaching people in our community now to do what I call cash flow parking in tokenized real estate, because it's super liquid, but you get cash on cash return between 7.5% and 10%. So most people who go on this journey towards the time freedom point are not saying, I need these $300 and shouldn't need these $300. They should keep accumulating so we can faster and faster buy these properties. Well, the best place to have them accumulate, in my opinion, and again, heroes, last man standing, is right now, if you could put your cash flow in real estate and tokenized real estate on the platforms that we recommend is $50 per token. Right, so if you have $300 coming in the first month after your purchase, you have 5 tokens, and you can do this every month. And then you have your second house, and it might be 10 tokens or 12 tokens or whatever. That way, your cash flow is actually earning money as well from other smaller real estate investments. And over time, like I said, even though it looked like 14 years for 14 properties, it's probably more like 10 properties in 8 or 9 years.
That's a pretty dramatic difference from the idea that we have to save up $200,000 before we can even enter the market and to start to realize those appreciations, all the way down to $50. So we have a range of different investing styles and everything. And you make a fairly compelling case to start the process now and not necessarily commit yourself to a strategy where you have to save up that much liquid cash, because by the time you do, the $200,000 goal might be even higher with inflation and appreciation. And you've missed out on years of potential growth. So I do think that's a pretty compelling case there. With the tokenized, when you work with your clients, are you working with them to chop up that goal and are you steering them toward tokenized real estates, toward individual investments? What do you favor with your clients these days?
Well, I favor the benefit of leverage. It's basically the answer in a nutshell. The difference between a tokenized real estate investment, as I called it, cash flow parking, and the investments that we actually favor to be the main drivers of the journey is leverage, right? If I take that, like right now, for example, we are helping our clients to get into properties in Memphis, brand new builds. I call that infill building for $160,000 a house, like the lot with the house, brand new build, finished this year or next year, $160,000. So you need about $32,000 in down payment, right? Now, when that house, and I think that was the point that you were making, Jason, when that house appreciates by 5%, which is pretty modest, I would say, right, for a brand new house. So that's basically around $7,500, but on my 1,000 or something like that, that's about 30% or something, maybe even a little more than 30% appreciation, like cash on cash return on my money. In tokenized real estate, everything is cash, right? So whether you buy a $50 token, if you take that same house and the platform operator buys that $160,000 house in Memphis, they buy it for cash. Then they take the $160,000 and break it into $50 increments and say, hey, Jason, how many of those tokens do you want? Rory, how many? Axel, how many? Or fill in the blanks. And we can all have up to 10% maximum of the tokens in a property. But we pay cash and they paid cash. So that whole aspect of leverage is gone. Now, still, the property is the same kind of property. It collects the same kind of rent. We participate in the rent. We participate in the K1, in the depreciation, all of that. But it's similar or more akin to a cash purchase without leverage versus a leverage purchase. And I mean, it's very obvious. The 5% to 30% ratio, in some cases even more, is obviously better performing and more desirable. But then again, most houses cost more than $50. So it's a balancing act. And that's why I say for the actual purchase and performance of your money, you want the leverage deal. But when it comes to when I get cash flow out of it, which is basically a leftover part of the tenant's money, you want that to perform better than what any savings account in any bank would give you. And you don't want to speculate with it either. That's why I say keep it in real estate.
So, you mentioned earlier, we've seen bonds, stocks, crypto, everything crashing. Yeah. Real estate, we're the ones still at the top of the hill because things continue going up and up and up. If you own a number of properties, we're still feeling confident. What's in the crystal ball? Like, is this kind of the direction where you're still advising your clients because of the volatility elsewhere? Like, obviously everyone has a prediction for where things are going. I'm not asking for you to say where interest rates are going to be or whatever, but just as a whole, is there still confidence in your mind in investing in the real estate world? And do you think this will allow people to weather the volatility of the other financial markets pretty well?
Well, the short answer would be yes. A little bit more in depth, one thing that I've become very fascinated about and reading and educating myself more and more and more, maybe because I'm believing that I know quite a bit about real estate, but now I try to understand the macroeconomic environment that is kind of guiding. So to your point, I believe that the price side of real estate, on the broader scale, if you're not looking at any kind of special circumstance or particular area with particular circumstance, on the broader scale, I believe we are far, far away from filling in this massive hole on lack of supply that has basically developed between 2010 and 2020. I mean, with the whole financial crisis, from my perspective, builders and the banks, through their regulations and stuff like that, created at least a 10 million unit hole of units of real estate or houses and apartments and condos that are needed in the market. And that's not even taking into consideration the population growth. Right? It would be probably more like 12 million or something like that if you added that in. And even though with the boom that we have been seeing in price appreciation, there has obviously been a big trigger to build more and start new developments, it's still an enormous mountain to climb. And now when you say, okay, well, how about now? Right? Well, now we have the problem that people, and you have to keep in mind, most of these new developments are being built for owner-occupants. Now they run into the problem with the Fed increasing rates as they have been and seem to be continued to do for the rest of the year at least. Mortgage rates are at a level that the typical owner-occupant is more and more in the bind of qualifying. So there is most likely in my crystal ball a hesitation to start brand new projects this year and maybe even next year, regardless how long it takes to get the permit, just because you don't really know how many potential owner occupants would qualify at 6 and 7% mortgage interest rates, which is in a sense a good opportunity for us because any inventory that comes on the market and builders who had thought they had it already sold and people have to basically jump off the contracts because they can't afford it anymore, those builders would be looking for you and me and anybody else to say, is there maybe an investor who would buy this property and then rent it out? Because I believe we are always in this balancing act, and right now with the environment that we are already in and probably going to be in for a little longer, I'd say about next 2.5, 3 years, there will be much more demand on rent and less demand on purchase, except for investors who we love tenants, especially good tenants and good deals. So long story short, I believe that we won't see the same price appreciation as we have seen in the last 2 or 3 years. But in my approach with the time freedom point and the things we discussed before, appreciation is basically the icing on the cake anyway. Right? We're buying this property for the long term to generate the cash flow, not because we are trying to sell them in 5 or 6 or 7 years. So if it appreciates really rapidly, then we would be I would advise my client much more likely to get a home equity line of credit to tap into the equity and buy another property than sell the one just because it got more valuable. Because remember, cash flow performance is the aim of the game. Right. So that's basically how I see it. So price appreciation, I don't think is going to stay as high just because we're kind of getting to a plateau. Demand for rentable units, I believe, will go up. Rents have not really anywhere caught up to the price appreciation. So I believe rents themselves will continue to go up, which to some extent will result in more cash flow. But you could counter argue, well, how does this mean more cash flow when interest rates have been going up like this? And so one of the things that I'm advising our clients is because, well, let's say it this way, I'm advising them to look for more creative financing options like interest only or adjustable rate mortgages. And I can tell you why I'm saying this. I'm looking right now, and anybody can go on nationaldebt.org and see that we are at $30 trillion plus in national debt. Now, last year, the government paid about not quite $600 billion in interest at an interest rate at between 0 and 0.5%. We are already approaching 2, and according to the Fed, they want to go to 3. That's basically saying that's kind of like where treasuries are going to be. So with some, if you're generous, you could say that's 6 times as much. I don't even want to go there, but it probably means that we're going to look at something like $1 trillion of interest on the debt. How long do you think we're going to be able to sustain that? Politically, I think that's total suicide. So yes, I understand that they want to catch inflation and do something. But when we look at this macroeconomic thing that we call the economy, I don't think it's sustainable for very long. That's why I'm saying from today, 2.5, maybe 3 years, and then at the very latest, the Fed has to come back to something more reasonable, not for us, for investors and homeowners and stuff, for being able as a government to serve our debt and not collapse the whole place. And because of that, then things will be cash flowing a little better again. But in the meantime, if you say, okay, I get a interest only loan on my mortgage and don't pay any principal for 3 years, why not, right? And that helps you with your cash flow and benefit from the higher rents that you can get.
And I mean, that's excellent insight. And, I salute you for putting some predictions out there, because I know when I've made predictions in the past, I've often been wrong. But
I would be wrong too.
but every few years, a new type of opportunity comes out. The way we would have invested in 2010, when there was a different set of opportunities in the wake of the financial crisis, is not necessarily the strategy that works today. And by the time people perfect a strategy, write books, get them published, and get them out to the world, the opportunity often has passed. So I think, when you're working with your clients, there's a bit of agility out there and a bit of a willingness to have to change strategies as we go through. But the fundamentals seem to be the same. And that is, you want to get into real estate. Real estate is fundamentally a good long-term investment, subject to, it's not immune from the rest of the market, but in many ways it survives the rest of the market. And that's, that's the value I think you add to your clients. Before
exactly. If I may comment on that for a minute, one thing that I find interesting is a little bit of a vignette that a guy by the name of Michael Saylor recently said in an interview. He was asked, what are good investments in your view? And he's, for people who know the space, he's one of the most adamant supporters of Bitcoin. But they said, well, Bitcoin one thing, but how about other things? And he basically made a strong case why value assets are the place to be, which is where residential real estate falls. But what I wanted to, into what you were describing, Rory, as a quick comment, if you pick any location, if you like a place here where I live, or a place in Boston, or a place like in this case, Michael Saylor spoke about a nice house by the water in Miami. Mm-hmm. That house, let's say, was built in 1975. Beautiful house. And at the time, it cost $180,000. The thing that the house gives you and me and anybody out there, the space to live, enjoy ourselves by the water in Miami in the nice weather, is a certain kind of service, so to speak, if you want to look at that. And it used to cost you $180,000. Now it costs you probably $1.1 million. But the house is not different, right? And so what that really points towards is the reason it costs $1.1 million is not because the service that the house brings to any occupant or anybody who goes to it is different. It's just the money isn't worth as much anymore. And that's really the same thing that applies to all our investment properties. Right. So if we have inflation, which actually means the value of the money that we're using to go buy a watermelon or stuff like that is decreasing rapidly at right now 8.6%. So if you buy a property and you say, okay, it's not down in Miami by the beach, but it's somewhere in Cincinnati that performs well and gives the service to our tenants for $1,200, $1,500 a month. Well, if the money keeps losing its value, then obviously the price of this thing has to increase because it still provides the same service as before. And that's one of the big differences that people, I believe, hopefully can benefit from understanding is it's not that the price of the house or the value of the house increased in the sense of it is somehow giving us better living or more square footage or anything like that. It's the value of the money that we give for it is going down. And that is going to continue. And I don't know how inflation will look like next year and 2 years from now, but it's not going to be 2%.
Well, I think that a lot of the institutional investors are finding their way to real estate as well, which is causing even more of a tightening for people that are looking to buy their first homes because they're competing against larger corporations. Everyone sees inflation at these high numbers. They're all looking for ways to park their money and watching it grow and beat inflation, or at least keep up with it. And that's causing even more of a bind because, hey, those watermelons are going up in price.
Exactly.
When I go to the wholesale club, I think my basket of stuff is like $30 or $40 more than it was just a few months ago. It's just kind of how it is.
Yeah, absolutely. Right? Well, the thing I want to actually support a little bit because sometimes the institutional investors are basically put into like the doo-doo corner or something like that. I'm always trying to ask people, think about what money are they using? They didn't just go to the money tree and pick a couple of bills and then say, well, let's see where we can invest it. Typically, it's money that comes in because of 401ks or of IRAs or of 539s or whatever other plans people are doing to try to accumulate wealth or accumulate money for a certain purpose, be retirement, college, whatever. So I always say, well, if you give this to an institutional investor, wouldn't you want them to look out for putting your money on your behalf somewhere where it performs well? And if you currently look and say, okay, well, in the past, for 11 years, the place to go was the stock market. But, it's like musical chairs. It ends at some point, right? And so now they have to look, and they, I think, saw the writing on the wall for a few years already that this is not going to continue forever. And now they're looking in places where can we put the money of our clients and have it perform well, right? I find oftentimes the description that we see in the media about certain things and what's happening in markets extremely shortchanged, and they never really put any reasoning in it. They just put the headline as horrible as possible to attract people's attention. But when you really look behind it and say, okay, you're putting, $500 a month in your 401k, wouldn't you want your institutional investor to put it in a place that appreciates really well? I would say so, yeah.
I mean, we could probably go on and on about these macroeconomic conditions that are causing a lot of the microeconomic issues that people are having. And we appreciate all of your insights, Axel. I do want to get to the final questions that we have, and then you could tell everyone how they could find you, ask lots of great questions, work with you. I do also want to mention, earlier on in the episode, you said something about the forums and Bigger Pockets. And, I also want to underscore that. I mean, I think the Bigger Pockets has allowed a lot of us, myself included, to work toward becoming the real estate investors that we never knew that we were, all because of the amazing information that's out there, the willingness for people like yourself to answer questions and to say, hey, if you have more questions, just reach out to me. I've said this many times in this podcast that this is, it's not a zero-sum game. You don't have to lose for me to win. We could both win together. Lots of people could win at this game. And I think people are very willing to give information out because there's so many different ways that people can invest in real estate. And, I know Bigger Pockets has been there for quite some time. I think I just looked at my profile. I think I opened it up 7 years ago at this point. Yeah. I mean, right. And starting to communicate with people, but 7 years later, it is still a really important place. And I always direct people there if they are just looking at me and I start talking about real estate and they don't know me as that, or they do know me as that and they don't know what I'm doing, as an investor on the side of, when I was working full time. And they're like, well, where are you learning all this stuff? And I just say, just start at Bigger Pockets. And you go down this rabbit hole and next thing you know, they're as excited about it as you and I are.
Yeah, I totally agree with that. And the reason I mentioned the forums is mainly because you can ask your specific question. You can describe your specific circumstance. And if your audience is wondering, okay, so couldn't you put this in an online learning program? People charge people $5,000 and have them learn it themselves. My answer is, well, you can put some fundamental information out there, and there are plenty of people who do that. But in my experience, and I've really worked with a lot of people and keep working with a lot of people, and I have not so far really seen one case that was even close to the next case. Right, because of the age or the history or the savings or the horror stories or whatever it is. And so having a place in the community where you can say, here is my circumstance. Who has any kind of advice? And if you like what you hear, to say, well, okay, maybe this person is a little deeper than just this answer. And I just like you said, Jason, I totally agree. That's the beauty of this thing. And that's, I think, what kept it growing and kept it so vibrant.
Yeah. Well, we certainly appreciate all of your insights also. And, the forums and Bigger Pockets is somewhere that I want to invest time in right after this podcast. It just kind of gets me thinking about it again, saying, I want to jump back in that. Sometimes, life gets in the way, but It's such a wealth of information, and I know people that are listening to this podcast are probably bigger Pockets fans as well. It's where a lot of us got our interest. Why don't we get into the final couple questions that we ask all of our guests, just to get to know you a little bit better, and then we'll allow you to let everyone know where they can get a hold of you, and we'll put all this stuff in the show notes, all the links to your website, social media profiles, everything. First of all, first question: if you can get on stage for a half an hour and talk about any subject in the world with zero preparation, what would that be?
Yeah, what I would love to do in hopes of inspiring people to join me or help me is to point out that we have all the technology necessary to make our investment properties environmentally friendly. Right? We know what pipes it takes to collect the water. We know what options there are to put solar panels on them. We know that we can put a battery pack in the garage and charge our electric car, even if we don't have it yet. It can be there and help run our house, and on and on and on, right? There's so much amazing sustainability technology out there. And I would love to advocate for that if I get like a TED Talk or a stage or stuff like that.
Yeah, that's a great idea. We have not had anyone talk about sustainability to that extent, have we, Rory?
No, not yet. I mean, I think it's, for a lot of people, it's a secondary thought when it should really be at the forefront of what we're thinking. But the people we've spoken to, however we arrive at the conclusion, talk about it in terms of cost savings. But I think adding it to our core mission, just sustainability. I don't want to go off on a tangent here, but when we just look around at our own neighborhoods and the way we've built and, the way this country's been built over the past few decades, you can see some glaring inefficiencies. And, we can't solve that overnight, but if we put sustainability at the forefront of our investing, we can make a difference.
Yeah, there are triggers, right? Like, I mean, right now we see only one facet of it, that are the gas prices and at the pump. But if you were living in Europe, for example, and you see gas prices, food prices, the literally natural gas for heating and all that kind of stuff is like doubled just since the war started, because there was such a huge dependency on supplies from Russia and Ukraine. And over there, they're now trying to scramble to find alternatives. Well, my message would be from that stage, like you said, Jason, let's not wait until we're in desperate times. Let's use the available technology and get our stuff done so that we don't ever have to say, well, can I actually buy food or can I pay my electrical bill because I have no solar panel on the roof?
Right. Well, I will say, Rory, all the construction trucks that we see in our neighborhood right now for the builders, it says "Build it green" right there on the truck. So hopefully we've been working with some good sustainable builders here. Right. That would make you proud, Axel.
Yeah, thank you.
Second question we have for you. Tell us something that happened early on in your life or career that impacts the way that you're working today.
Well, there are a couple of things, but the one that I would want to point out is I learned very early on from school and then also into the military, and maybe a little bit because of the sins of my ancestors in Germany, that people are good. And I adopted from that, you don't need to earn anything. You can, when you engage with me, assume that I'm assuming, regardless where you come from, how you look, what color of your skin, what kind of habits or background or whatever, I assume you are good and you want the best for yourself and for other people. Which means as long as you just barely or more than barely meet that expectations, we're already good from day one. You don't need to prove 100 things before I say, okay, Rory, now I can finally trust you. That would never happen. And that was a very important lesson, because throughout my career in all these different places, cultures, and circumstances, it has always served me well to look for the good and get confirmation the good is really there.
I kind of subscribe to the same mindset. I mean, like in the Northeast, we don't always trust everybody. You kind of have to earn the trust a little bit, but I go into every conversation thinking like this person is a good person until otherwise proven. And the final question we have for you is, tell us something that you're listening to or watching or reading these days.
Yeah, I've just finished one. I'm about halfway through the other one, 2 books, and I'm actually become a pretty big fan of Audible. I'm listening more than I'm actually having physically the book. The first one, and they are in that sequence. I'm not saying you have to read them in that sequence, but I would say it's probably helpful. The first is called the Bitcoin Standard, and the second one is called the Fiat Standard. And just for people who say, well, why would I want to read a book about Bitcoin? What I found so fascinating, I didn't know this until I read them, is that they're really in 2 volumes, basically, describing the history and the workings of money. And it's, if you read how fiat money impacts our food supply, our technology supply, our science and stuff in a concise way, I was blown away. So if somebody wants to learn a little bit about the history and the workings of money, I would definitely recommend those 2.
Do the books go into the gold standard also, like the fiat money book?
Yep. They basically start out with seashells and little trinkets and stuff, and then they go to the Roman gold and silver coins. And why do coins have these little rivulets at the side? Do you guys know that?
I do
not.
Actually, when the emperors were trying to find ways to get some of the gold or silver that was originally put in the coins back, they came up with a scheme to shave off little pieces. And if you have enough in circulation, you can basically make new coins without having to mine new silver or gold.
Right. It's like it's like the package of cereal that was 18 ounces that's now 17 ounces. And you're paying basically a little bit more for that.
Yeah, exactly. Well, and then they started adding nickel and started adding bronze and stuff like that. So there is a long history of what was money, how was money used, how was it manipulated, and the shocking thing is it's basically about a 10,000-year history, and the manipulation hasn't stopped.
No.
But that sounds awareness, right? Like, sorry, Jason, but one of the things why I'm recommending stuff like that is I have found for myself, if you raise your level of understanding and awareness, you're just playing in a totally different league, right? So, you hear stuff in the financial news or even general news, CNN or whatever, and you have the awareness and how these things fit together. How does money work? What does the Fed mean when they say they need to increase interest rates to try to fight inflation? Why am I saying the house in Miami is still the same service, same square footage, nothing changed, but it's now 100 times as expensive, right? So those things are beautifully described in those 2 books.
It definitely adds a different dimension to understanding the news that we see that we don't think impacts us. And then when you talk to a mortgage broker and you realize it does impact you, it kind of adds a different dimension to that understanding.
Yeah, and you might ask yourself, okay, how am I going to carry my $200,000 worth 10-kilo gold bar around, right? And that's why
it's so heavy. I could barely lift it up right here.
Yeah, right, and that's where the place for Bitcoin comes in, right? Like where they say, okay, imagine we're digitally, it wouldn't be so heavy.
Yeah. Well, I have to go count that 200 grand or so. Recount it today. That's my activity for the rest of the day. But tell everybody where they can get a hold of you if they'd like to learn more or work with you. I know idealwealthgrower.com is probably an easy way to get a hold of you, but tell us what's the preferred manner.
Yeah, the best way, idealwealthgrower.com gets you to the website, but if you just go on Google, Yahoo, any of the search engine, put in Ideal Wealth Grower as a search term in 3 words, 1 word, whatever, you will find us pretty much across all the different social media sites, and each one of those has a way to get in touch and we will respond. So website or any social media place under Ideal Wealth Grower and you get us.
Great. And we'll link it up in the show notes, as I mentioned. Rory, what a great financial education that we just had over this past period of time.
Well, let's take this and let's run with it and just keep learning more and more. That's our goal.
I have my $200,000 gold bar right here. I can't really run with that, but so Rory, where can people get a hold of you if they want to get a hold of you?
People can find me at my real estate brokerage, Next Home Titletown. That's nexthomeTitletown.com, or at my law practice, Urban Village Legal, urbanvillagelegal.com.
Awesome. Axel, thank you so much for being part of the Real Estate Law Podcast. We were looking forward to this conversation and certainly delivered. So, we really appreciate your insights, and we'll have to circle back with you down the line in different economic times, whether it's better or worse. We don't know where it's going. So we'd love to get your take on it in the future as well.
Yeah, that's awesome. Thanks for having me. And I see you at your time freedom point.
Yeah, exactly. And thank you for listening. If you've enjoyed this episode, we'd love it if you would give us a quick rating or leave a comment. You might be listening on YouTube or on Spotify or any of the places where podcasts exist, because we are in all of them. So if you want to be a guest on the podcast, reach out to me directly. You could find me, Jason, at nexthometitletown.com. And that's it. It's been another great episode of the Real Estate Law Podcast. So Axel, Rory, thank you so much for all of your insights and for your time today. And thank you for listening. We'll see you next time.
This has been the Real Estate Law Podcast, because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. We're powered by Next Home Titletown, Greater Boston's progressive real estate brokerage. More at nexthometitletown.com. And Urban Village Legal, Massachusetts Real Estate Counsel, serving savvy property owners, lenders, and investors. More at urbanvillagelegal.com. Today's conversation was not legal advice, but we hope you found it entertaining and informative. Discover more at realestatelawpodcast.com. Thank you for listening.